Welcome back. You know, some traders build watch lists for entertainment. Sounds odd, I know. But when your trades are driven by headlines and herd mentality, your watch list isn't a tool. It's just a distraction. Mine isn't built for entertainment. It's built to feed trades. When one set of stocks is running hot, a strong watch list keeps you away from overbought, low-probability setups while pointing you toward oversold, high-probability opportunities. When a quality name goes cold, it often means the stock is selling at panic prices. And when nothing is happening, for put selling, the watch list still earns its keep, because sideways price action often creates even more income-generating setups. That's what I mean when I say, ride the rented mule. By rent, I mean income. Selling cash-secured puts on quality, dividend-paying stocks is more than a yield enhancer. It's a way to actively generate income while you wait for better entry prices. If the put expires worthless, you reload and sell another. If it gets assigned, you just bought a business you already wanted at a discount with built-in passive income. Either way, the mule keeps working for you. That's the beauty of the system. But here's the key. You can't ride what you don't track. That's where your watch list comes in. A lot of people treat their watch list like a wish list, a collection of stocks they like or companies they'd maybe buy one day. That's not what we're doing here. A real watch list is a working inventory. It's not about watching stocks for fun. It's about tracking businesses that are ready to be plugged directly into your trade process. If your system is built on value-based put selling, dividend income, or technical setups like pullbacks, your watch list should reflect that. Not every stock on it needs to be tradable today, but every name should be a functional candidate for a trade, not just a someday maybe. Let's walk through how to build that kind of list. Forget scanning tools and hard-to-understand screeners. Don't start with somebody else's stock picks or some algorithm's output. Start with what you understand. If you shop at Costco, you know how they make money. If you fly Delta, you know what they sell and how customers feel about it. If you wear Levi's, you know how durable that brand is. That's your edge. That's your circle of competence. That's where confidence starts. At this stage, you're not filtering for valuation, trend, or momentum. That comes later. Think like a business owner stocking shelves. You want a selection of durable, recognizable goods, not just flashy momentum plays or names that happen to screen well. Valuation and technicals will tell you when to act, but business quality, what I like to call fundamental strength, should tell you what to keep on the shelf. Diversification in a watch list isn't about spreading risk. It's about spreading opportunity. If your list has 15 tech stocks, what happens when tech sells off? You've got no trades. But if you're also tracking energy, retailers, airlines, and healthcare, odds are something will be ripe for a trade, no matter what the market is doing. Economic diversity equals watch list durability. That's how you make sure your list is feeding you opportunities all year long. Here's where a lot of people get it wrong. If your watch list takes 90 minutes to review, you're going to quit. Period. The sweet spot? A list you can scan in 20 minutes or less. That's usually 25 to 40 names. That's plenty to catch sector rotation, mispricing, and technical setups without turning your investing process into a full-time job. This is not a library. It's a feedlot. These stocks are here to produce. Once you've built your list, the daily workflow is simple. Check the chart. Is the stock sitting on a key support level? Did it just break a major moving average? Is implied volatility climbing? That's all you're doing. You're not rerunning financial models every day. You're scanning for movement and setups. When price action lines up with your system, that's when you dig deeper. Until then, just watch. A good watch list evolves, not daily, but deliberately. If a stock no longer fits your system, maybe it's too illiquid, maybe management is sloppy, maybe it just doesn't behave in a way that works for your strategy, cut it. If you find a new stock that does fit, add it slowly. As you gain confidence in your review process, you can expand your list, but make sure you can still scan it efficiently. Scale with skill, not curiosity. And don't overload your list with one sector. Keep it balanced. Let's ground this in real names. Say you've got Delta Airlines, Levi's, and ConocoPhillips on your list. Three totally different businesses. All three recently traded at or below levels that made put selling attractive. If the market rips higher and those puts expire worthless, you reload. That's the mule earning its keep. If the market sells off and you get assigned, you just bought a cash flow machine in Delta, a dividend grower in ConocoPhillips, and a contrarian retail brand in Levi's. Either way, your trade came from a vetted, ready-to-go watch list. You didn't chase headlines. You didn't scan 5,000 tickers. You just used your inventory. Now, let's be clear. Put selling isn't magic. It only works if you're willing to own the stock, you're disciplined about pricing and strike selection, and your list includes businesses worth owning. That last point is why your watch list matters so much. If you're scrambling to find trades every time you want to sell a put, you'll miss setups. Or worse, you'll trade junk. The key to riding the mule is having it ready, tracking it, feeding it, being ready to ret it out again when the last job is done. Your investing system needs raw material. A watch list is your supply chain. Done right, it becomes a self-sustaining engine that works in bull markets, bear markets, and flat conditions alike. It's how you spot real setups without wasting hours, generate put-selling income on quality names, trade confidently without chasing hype, and ride out volatility without scrambling for ideas. This is discipline, not prediction. You don't need to know what the market will do next. You just need ideas that can function regardless. If you're serious about investing, treat your watch list like the working tool it is. Build it deliberately, diversify it intelligently, trim it ruthlessly, and review it consistently. Because when the market gets noisy, you won't. You'll have a plan, you'll have a setup, you'll have names ready to ride. When the time comes, you'll do what disciplined traders do. You'll ride the rented mule. Thanks for watching. If the idea of renting the mule, putting cash to work with discipline, resonates with you, hit like and subscribe on this video and share it with someone who wants real income from real trades. You can also subscribe to my Substack using the link below and download the free Rebel Income Starter Guide. It's packed with practical strategies to start building monthly income from stocks you actually want to own. See you in the next one.